While the public market reflects a deep sell-off, the private order flow shows a different story. Large-scale buyers are absorbing the exact liquidity that retail investors are shedding under pressure. Retail traders are exiting their positions at a loss, reacting to a flat price and a wave of bearish sentiment. Meanwhile, the smart money is moving in the exact opposite direction, accumulating the very assets being abandoned. On-chain data from Alley charts confirms a massive divergence between public fear and institutional behavior. In a single week, whales aggressively purchased over 40 million XRP, filling their orders through retail panic. Sentiment data shows a steady increase in major wallet tiers, with over 32,500 individual wallets holding more than 100,000 XRP. These institutions are positioning themselves for a specific shift in network function. They are quietly structuring their XRP holdings to serve as working capital, preparing for a period of restricted supply. Institutional accumulation often thrives in periods of low volatility. By maintaining a compressed price, large-scale buyers can fill massive orders without driving the market against themselves, effectively shaking out retail hands before the network pivot. Former Ripple executive Ashish Birla recently addressed why the current price seems so disconnected from reality. He noted that the network's value is no longer tracking with its internal adoption metrics. XRP's price remains restricted because the network is not yet acting as a global liquidity bridge at scale. The current trading volume is driven by speculation, which doesn't require the massive capital flows the ledger was built for. When global banks transition, they'll leverage XRP as daily working capital to move trillions between separated financial silos. This is already visible. Daily transactions are nearing 3 million. This 300% increase from 1 million in mid-2025 proves foundational adoption is rapidly accelerating. We are seeing a stark divergence between network utility and market price. On-chain data reveals a growing, high-velocity infrastructure that market emotion has yet to acknowledge. Despite these metrics, Wall Street has historically refused to use public ledgers. Their entry into the space was blocked by a single, specific structural requirement. Ripple CTO David Schwartz identified the core roadblock: strict AML and KYC compliance. AML stands for anti-money laundering, and KYC means know your customer. These laws require banks to know exactly who is on the other side of every trade, an impossible task on an anonymous public blockchain. That barrier has been removed with the launch of permissioned domains and the permissioned DEX. A DEX is a decentralized exchange where assets are traded peer-to-peer. These new permissioned layers allow institutions to move volume on-chain while meeting every federal identity requirement. Wall Street was never waiting for better technology. They were waiting for these specific compliance rails. Now that those rails exist, the path is clear for trillions in institutional capital to move onto the ledger legally. With the technical infrastructure in place, the final component of the pivot is now emerging from Washington. A tentative deal has reportedly been reached between the White House and U.S. lawmakers. They have finalized a set of rules for stablecoins, providing the first major piece of regulatory structure for the digital asset market. This stablecoin deal is the catalyst for a much larger piece of legislation, the Clarity Act. This bill will establish the broader market structure that traditional finance requires before committing to XRP at scale. If you hold digital assets in the U.S., contact your representatives and demand the passage of the Clarity Act. This is the legal foundation the institutions have been waiting for. Massive whale accumulation, permissioned infrastructure, and White House legislation are all converging. This combination guarantees the transition of XRP from a retail asset into the primary working capital for the next generation of finance. But securing XRP is only the first step. Global banks are currently testing a second, parallel asset in secret, one designed to facilitate the movement of these trillions across the ledger. To see the data on that second asset, click the next video.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.